Hello friends, today let's talk about Aster DM Healthcare, a big private healthcare provider with hospitals and clinics across India and the Middle East. Let's see what their numbers really say. Let's start with sales. 10 years ago, company did 2,871 crores in sales. This year, they have reached 4,214 crores. That is just 1% average growth per year over 10 years. Very slow for a healthcare business. The last 5 years show a minus 14% average decline. But the last 12 months saw a sharp 9% recovery. The growth pattern for Aster is erratic, up for a few years, down the next, with a sharp drop during and after COVID, and only now starting to bounce back. Expenses rose from 2,421 crores to 3,428 crores this year. Material cost, medicine supplies are around 20 to 35% of cost, lower than peers as they do a lot of services. Employee costs are the biggest piece, 25 to 38% of expenses, since staffing is huge in hospitals. Other costs make up 7 to 20%. Aster's expense pattern sometimes swings sharply, with big jumps and cuts in staff and supply costs over the years. Operating profit swung from 451 crores up to 786 crores now, but the journey wasn't smooth. Margins have moved between 6% and 19%. For the latest year, OPM is a good 19%, but in some periods it was just off that. Other income was 78 crores. Sometimes this jumps due to non-core business, but usually it's a small contributor. Interest is 125 crores, a bit high given their borrowings. Depreciation is steady at 252 crores, the typical cost for hospitals and medical equipment aging. If you look at net profit went from 284 crores 10 years back to 349 crores now. That is just 1% annual growth over a decade, very low. Profits actually swung negative during tough years, but bounced back this year with over 80% plus profit growth due to a big recovery from COVID lows. Earnings per share also reflects this, moving from 4.69 rupees to 6.31 rupees, but not a rapid rise like with other hospital chains. Return on equity is 8.26% and return on capital employed is 10.7%, both on the low side for healthcare. Dividend payout is modest, 5% of profits, yield about 0.78%, as most cash is used to rebuild and grow. So growth for Aster DM's healthcare has been erratic, with years of fast growth followed by big slowdowns and then rapid rebounds as the business and the economy recover from shocks. It's not a steady or defensive healthcare stock, but one with more swings. So overall, Aster DM Healthcare is an example of an erratic healthcare stock. Sales and profits can move sharply up and down with changes in demand, regulations, and market health. If you want smooth, compounding healthcare stories, this one isn't it. But for those betting on a turnaround and bounce back, Aster may have more upside left. If this breakdown helped, subscribe to Wealth Growth Club and tell me which company you want next.